Welcome back to Warren Buffett's Inner Circle. No one's perfect, and Warren Buffett has taken a few hits during this crisis. Berkshire Hathaway shares are down about 30% in the last year. And last month, Fitch and Moody's stripped Berkshire of its AAA credit rating. And also on Friday, this coming Friday, the company reports first quarter results. Going to be closely watched. For some guidance on what to expect, we turn to Charles Ortel. He is managing director with Newport Value Partners. He's advising investors to short Berkshire and buy credit default swaps. Last year, he made a similar call on GE, and that was on the money. And we also have Eric Holm. He's Bloomberg's in-house Buffettologist. Eric, great to see you. Okay, so I got to ask you about the Berkshire stock because it's taken a real big beating, down about 30%. How much of it has to do with the market, and how much does it have to do with investors actually losing faith in Buffett?
Yeah, I think it has to do probably with three things. And the first one has to do with the stock portfolio, which everyone knows most of what he holds. And he's taken some bets on companies like Wells Fargo and on American Express, and those stocks are down considerably. Wells Fargo down a third in the last year, American Express down by half. He also has businesses that make money in the jewelry business or in the housing business. You know, those things aren't doing very well either. And thirdly, he's got these derivatives that we've talked about before, but they are something where he has a lot of money on the line.
Right, and in the interview with me, he said, look, I'll continue to write the derivatives despite the questions that it's raised with shareholders. I mean, isn't that in some ways a source of concern for shareholders?
Well, I'll say it's a topic of intense interest anyway, yeah. It's something that Buffett himself talked about at great length in his last shareholder letter, sort of acknowledging, I think, that he's aware that some people may not be on the same page he is, and he tried to explain his side. So it's something where he's bet on the stock markets for many years into the future, and he's also bet on corporate bonds. And those sorts of things might be showing their losses
right.
much more
there actually could be more losses on that side than on those equity index puts that he has, right? Charles, let me get to you because you're recommending investors short Berkshire. Why exactly?
Well, we do it with great deference to a major figure in global finance. But if you look at the man's record back to 1965 and separate it into two distinct periods, 1965 to 1998, and 1998 to the present, what you see is that by 1998, his outperformance was magical. And so I know he likes to play contract bridge. He had a great hand in 1998. And in our view, with that hand, he could have done a lot better going forward than he has done. And the larger issue for us, when you get to be as big a business, and he admits this himself, as he is, it's very difficult to continue outperformance. We also
but he has said that. He has admitted that.
Right. And when you look at investing in Buffett, you're really making a macro bet on the American economy. And so we also come at it from a perspective that we think the macro situation that we're in right now is more than a fat tail, low probability case. We think that the American the global financial system is under unusual stress. We believe there are demographic headwinds that are going to make it very difficult to see growth, top-level growth in revenues. And Albert Einstein once said that growth is compound interest is the most powerful force in the universe. He's a pretty smart man. If you can't get that growth, you can't deliver value for shareholders.
Well, and getting, but aside from that, though, getting to what Eric was talking about with the derivatives, I mean, does that bother you at all, or does that even play into your scenario?
It bothers me enormously. I mean, when I look at a management group, and that group says one thing and does another, I get very troubled. Mr. Buffett said a number of years ago that derivatives were financial weapons of mass destruction. And I don't understand why he would then want to own such instruments today. It just seems a major conflict. And there are others.
Contrary, yeah.
And there are others.
Okay, Eric, very quickly, at this shareholders meeting, do you expect that Buffett's going to reveal any more information about these derivatives or not?
You know, he'll certainly face questions about them, that's for sure. He's arranged it so he gets much questions that probably will be much more probing than they have been in the past. He's got 3 reporters who are going to be asking some questions that they've screened.
Right, he may be more on the hot seat. Okay, Eric, thanks so much for joining us, and also Charles Ortel. Always great to see you.